welcome to this week's MFB News. Hope everybody has had a super weekend. The weather is such a treat, doesn't it make a difference to finish the working week and then have the weekend in the sun? Delightful. Anyway, what have we got for you this week? We're going to do our usual roundup of what's been happening, swap rates and lender pricing changes. We are going to take a look at the latest from the Renters' Rights Bill, and then we're going to have a chat about how many landlords are actually leaving the market at the moment, or what planning to leave the market. So for those of you who are hearing there's a mass exodus of landlords right now, we're going to dig into the data that sits around that a little bit more closely to see what's actually going on. Okay, so first up, a quick look at what's been happening with swap rates, and they are still doing okay, but creeping up a little bit from where they were. Why is this? So as we've mentioned in previous weeks, one of the things that really kind of helped to drive down swap rates was the US tariffs and the impact of this on the bond markets. Now we have struck a trade deal with the US, we saw swap rates kind of tick up a bit. So actually, in a funny sort of way, I guess you could almost argue the US has kind of redeemed itself, which is kind of then making it less unattractive for investors, which means they don't have to offer such low interest rates to attract investment there. So there has the counter impact on the UK. So everything, so many moving parts when it comes to these things, but that seems to be broadly what's going on. So in terms of swap rates, where are we? And this is as of 11:15 on Tuesday evening. 2-year swaps 3.76. 1 month ago 3.78 and 1 year ago 4.49. So month on month we're still ahead of the game, but not quite as ahead of the game as we were last week. 5-year swaps down are now at 3.77. 5 point, that would be awful, wouldn't it? 5-year swaps are at 3.77%. Now actually, for those of you who watch this video frequently, you would know that actually for ages I was just kind of waiting for them to get below 4. So 3.77 is fantastic. However, earlier this week and back end of last week, we were at 3.6. So things have floated up a bit. 1 month ago, 3.8 and 1 year ago, 3.96. So actually still like the 2-year fixed rates, we're ahead of the game, but things have moved up slightly. What does this actually mean for lender pricing? So whereas the lender's cost of funds on a 5-year fix were at 3.6%, they're now at 3.77%. So they've gone up by sort of 0.17% or thereabouts. Therefore, some of the lenders who've dropped their rates down may see that actually their cost of funds has increased, and therefore they're going to need to push their rates up a little bit to kind of counterbalance this. Have we seen a massive wave of lenders react to this yet? No, we haven't. Are we hearing rumours of some lenders thinking about repricing in the next few days? Yes, we are. Therefore, the message is very much this: if you're making a mortgage application and you don't want to miss out on your rate, you need to get your application in. The only thing that really books a mortgage application, or a mortgage rate rather, is actually submitting your mortgage application. So the agreement in principle doesn't really save the interest rate apart from for a couple of lenders. So if you are looking to bag your rate just in case things do go up, and like I say, you know, things chop and change all the time, but current state of play, swap rates have increased. Get your applications in ASAP. Now, it's just crossed my mind that we haven't actually talked about the fact that base rate went down last week. So as we have alluded to in previous weeks, the markets had penciled in 100% likelihood of base rate going down by 0.25%, and that's what happened. So great news, because actually base rate performed as the markets expected. Had it not have gone down, that would have knocked swap rates. If it had come down by 0.5%, that would have also changed swap rates arguably more favourably for us as mortgage borrowers. But the good news is that actually what was expected to happen happened, and so no great kind of shakes there. The good news is for those of you who are on variable rate mortgages, and this is, I'm telling you something you already know because you've been through a few of these recently, if your rate is a tracker, it's directly linked to Bank of England base rate, your payments will change immediately. For those of you who are on variable rates or standard variable rates, or rates linked to standard variable rates, it may take some time. The lender may not drop they're under no obligation to drop their rates down, right? So some lenders may not change their variable rates. Some of them may change it in a few weeks, and they may not change it by 0.25%. They may change it by a different number. But arguably, for those of you who are on variable rates, you should see, in theory at least, some reduction in your mortgage payments going forwards. Now, in terms of lender pricing changes in the last week, bit of a run from the high street, actually. TMW rates down by 0.3. Coventry have made reductions of up to 0.15. NatWest by 0.3. Virgin by 0.1. And Santander by 0.2%. So all people you'd find on the high street, I would agree TMW isn't one, but they're owned by the Nationwide, so you still do. So that's really good news. Like I say, if you've got applications you're thinking about putting in, get them in quick just in case. It might be this is all something nothing and swap rates ease back down again, but just to be on the safe side, get those rates booked. In terms of what we're expecting for the next week, I suspect a lot of lenders are now going to be sitting and watching the swap markets to see what happens with rates. So I'm not expecting a huge amount of changes in the next few days. Okay, so the Renters' Rights Bill is still trundling on, and there was another session on the Renters' Rights Bill in the House of Lords this week in which they debated pets and financial penalties, among other things. So now they have debated clauses 1 to 17. They've got another 123 to go that covers 70 pages worth of amendments, which are scheduled in the next two sessions this week. I can't imagine they're going to get through all of those. So I think realistically, we're probably looking at towards the end of May before all of the debates are finished. Now, in terms of the outcomes of the discussions, the very short version is that none of the opposition amendments have been added to the bill. So the only amendments that went through were kind of minor government amendments, so no great changes there. So for those of you who are across the Renters' Rights Bill, some of the things that got discussed this week, so we can rule out any changes there, so you can kind of see what's coming on the horizon. So first of all, rent in advance. So people had raised concerns about the impact on the prohibition of rent in advance, and the impact this may have on vulnerable or risky tenanters. So essentially what some people do is if somebody has a blemished credit file, or indeed someone coming from overseas and they have no credit file at all, people would look to take rent in advance rather than a kind of monthly ongoing payment to secure their position. Rent in advance is not going to be allowed. So that's not great news, particularly for those people who are regarded as higher risk. Civil penalties. So it was confirmed that the civil penalties of £7,000 and £40,000 are maximum levels. They will not be the normal penalty level. That's the good news. Local authorities were going to need to look at particular circumstances of each instance of non-compliance. So if you don't comply with the Renters' Rights Bill, there are penalties of up to £7,000 and £40,000 depending on the thing that you have done wrong, essentially. Enforcement. So it was confirmed that the context of a landlord knowingly or recklessly misusing a possession ground, that recklessness goes beyond making a mistake. It entails taking unjustified risk, and landlords should not take an unjustified risk where that action may result in someone losing their home. So just a kind of confirmation that actually, in terms of terminology there. Guarantors. It was pointed out that landlords will continue to be able to offer tenants who cannot provide a UK-based guarantor with the alternative of purchasing rent guarantor insurance. So coming back to that point about rent in advance, actually what landlords will be able to do is essentially ask the tenants to take out rent guarantor insurance instead, to kind of try and help that. I think a lot of landlords won't go for it personally, but let's just wait and see how it all shakes out. And obviously the other one I mentioned earlier on is about pets. No changes there either. So there you go. The Renters' Rights Bill keeps moving on. I don't think any of us were expecting any great changes, to be honest. Obviously the government have a huge majority. They can sort of push things through really quite easily. It's good these things have been discussed, and maybe things are the kind of quirks and peculiarities of the bill, which may have left for some kind of level of greyness or abuse, are being ironed out, at least in part. But as I think most of us expected, we're not going to see any great changes, or we haven't done yet. But there are still a load of clauses, 80 clauses still to go. So we'll keep you updated as they get discussed going forwards. Okay, now the Mortgage Works have released their latest buy-to-let barometer, which really talks about landlord confidence and market dynamics. And I want to share the data in here with you because it's quite interesting. I'm going to apologise. The font on this sort of document they produce is so tiny, and despite enlarging it by 175%, I still can't see it. So I'm going to have to put my glasses on. I'm getting to that age, unfortunately. So in terms of landlord confidence, compared to a year ago, fewer landlords are now upbeat about the near-term prospects for the private rental sector. And this is particularly the case for landlord expectations for their own lettings business, with the proportion feeling positive down to 31%, so minus 7% there. Other drops in sentiment are more modest, with rental yields and capital gains both recording a 3% fall in optimism versus Q1 in 2024. So why is this? What's going on here? So I think in terms of landlords' prospects for their own letting business, we are looking at the Renters' Rights, but we've only just been talking about it. Of course, landlords are going to be feeling less optimistic about the future at the moment because it's just a bunch of unknowns. I think once this all kind of comes out in the wash, the Renters' Rights Bill is through and landlords have had a chance to kind of wrap their heads around it and see it kind of working in real life. Hopefully things will kind of pick up. But at the moment, as always, uncertainty is like the worst thing you can have. So no wonder landlords are feeling pretty downbeat. The good news is that actually landlords are still feeling in the main positive, maybe slightly less positive, but still positive about the prospect of rental yields and capital gains. So there's some really good news there. Now, this is the one that kind of shocked me slightly. So the market dynamics, the planned sales activity in the next year is now at over 5 times the level of expected purchasing. So 7% of landlords are intending to buy a property in the next 12 months and 38% are planning on selling not necessarily all of their properties, but at least one of their properties in the next 12 months. Although the incidence of recent rent rises remains relatively high, the proportion of landlords putting up rents has fallen. By 8% year on year to 70% at the start of 2025. 38% of leveraged landlords, so those with a mortgage, will remortgage or take a product transfer in the next year. 20% of these will do so within a limited company. So I think really for me, the kind of key thing is here, the number of landlords that are planning to sell properties. Now this calls in an interesting question. I've talked about this previously. We've got quite a few landlords who have said, I don't necessarily want to sell all of my buy-to-lets. This isn't about exiting the buy-to-let market, and I'm not sort of taking away from the fact that people are just generally really fed up at the moment. But actually, for a lot of landlords, they're sort of re-looking at their portfolio, thinking about the energy efficiency coming in. So a lot of people are looking to sell off the properties which don't make the C rating at the moment, or the cost of getting to a C rating would be so huge. So there's that going on at the moment in terms of what's driving landlord thinking about exiting. Obviously, we've got the higher mortgage costs and all that kind of stuff. So the net effect of this is that some landlords are actually, that we're talking to, thinking about leaving the market. However, these guys are then putting properties on for sale and I find they're simply not selling at the moment. Now, I'm hoping that we will see the reduced cost in interest rates start to pull through to the home buyer market and things will pick up there. But the reality is, if you are a landlord who is thinking about offloading property at the moment, please don't expect a quick sale because the market just isn't in that place right now. So I think actually in terms of kind of the future and what we can read from this, so right now landlords are feeling very nervous about the Renters' Rights Bill. Actually, rental yields and property prices not so bad, but the kind of Renters' Rights Bill is causing a huge amount of uncertainty. We've also got the EPC changes coming in. The way some landlords are looking to react to that is by offloading some of their properties. Some cases it will be all, but in most cases it will be just 1 or 2. And then the net effect is, can they actually sell them at the moment? So an interesting time, as always, to be a landlord. There's never a dull moment. We'll kind of maybe think about this in 6 months' time once the Renters' Rights Bill is in. The property market will have changed shape again and revisit where things are and how you guys are feeling then. And there you go. That's everything for us this week. Thank you so much for joining me as always. I hope you found that useful. It did feel a bit doom and gloom this week after a few weeks of really positive news. Let's hope that turns around. And it's not all doom and gloom, but there is obviously quite a lot of kind of unknowns at the moment, particularly around the Renters' Rights Bill and mortgage pricing. So, but then I feel like it's been like this for months now, so maybe no changes. But look, in the meantime, if you have any questions, we're always very happy to help. You can give us a call and have a chat with us. The guys in the office are incredibly friendly. You may even get through to me if you phone up, you never know. But actually, any of the stuff we've talked about today or mortgages more broadly, we'd love to have a discussion with you. 0345 345 6788. Have yourselves a lovely week, a beautiful weekend in the sunshine. At least we have that to be grateful for at the moment. And I'll see you same time next week.